Hey, welcome back to the channel. We just received the October real estate stats for Metro Vancouver and the Fraser Valley. We're going to talk briefly about what happened in the market last month and how it pertains to what is likely to happen in the real estate market as we head throughout the rest of the year and into 2026. Real quick before we get started, if this is your first time to the channel, my name is Hasan. I'm a real estate agent in the Vancouver area, and I make educational real estate content to help you on your real estate journey. When I'm not making videos like this, I'm helping people just like you buy and sell real estate across the Lower Mainland. So if that sounds interesting to you, you want to chat with me one-on-one, you can book me for a free call in the Calendly link below or on screen, and subscribe to this channel so you don't miss a future video. All right, I hope you had a wonderful week. We're going to jump right into it. We just received the October sales results for Greater Vancouver and the Fraser Valley. And long story short, both sections, both areas were down year over year versus the previous year, and quite significantly. On the Greater Vancouver side, down 14% sales quantity wise, and on the Fraser Valley side, down 17% year over year. Now, these aren't generally large numbers for us to be down compared to how it was for most of this year. But at least on the Greater Vancouver side, over the last few months, we had been coming much closer to last year's number. And in fact, over the summer months, we were increasing on last year's sales numbers. So if you just look optically at the year over year sales, you might look at it and think, okay, we were about to turn around, and then all of a sudden we dropped right off and things are changing, and perhaps sentiment is down even further. I think the thing for us to keep in mind is we're in very much of an anomaly year, and so we have to look back at what happened last year at this time. Now, October 2024 compared to the year prior in 2023, they were up year over year around 32 to 36%, Greater Vancouver and the Fraser Valley year over year sales wise. What happened last year is the Bank of Canada began its rate cutting cycle about midway through last year, and then they started to make significant cuts as we were heading towards the end of the year. And we really saw the impact of that last year in October when sales spiked. There was a lot of confidence in the market. People were expecting further rate cuts, which they did see. I think in November or December, there was another 50 basis point cut. So, consumer sentiment was quite high. October was a very strong month. November also was up on the prior year, over 30%. So again, when we report year over year numbers, we're comparing to exactly what happened last year. And so when November sales results come around, we can expect, double digit sales declines again. Optically, it's not going to look very good. And realistically, it's not good. The sales results are down. But sometimes the way the numbers work and base year effect, when you're looking at what happened last year, it has a major impact on how the numbers actually look. So expect for the month of November, even if we have a stronger month, we are not going to come close to the November number of last year. What ultimately happened is, we started to see this momentum. October, November, even December slows down always in December. January of this year was another strong month. We were up over the last year, double-digit sales increases. And then we all know what happened at the end of January. We have a new U.S. president. Trade war, tariffs are all over the headlines. Basically, at the end of January and right through February. And February is when sales dropped right off here. Spring market, no more. Sales dropped off. People were very concerned. And so when we think ahead of what might happen, moving forward, if we look into 2026, at least from a sales numbers perspective, in order for our market to recover at all, we need to be up, or at very least on par with last year's number. If we're down on February, March, April sales, that is going to be a big indicator of a very, very sluggish market here in Vancouver. If we are down in those months, I expect January we probably will be down because, again, we had a stronger year last year. So the whole moral of the story is when we're comparing to last year's number, there were some anomalies that happened. And this year, a whole different story, right? Because we saw further interest rate cuts. And we saw something here in Vancouver real estate we pretty much never see. And it's basically that, interest rates are coming down and sale prices were coming down with them and continue to come down. So last month, if we look at year over year sales, depending if you're looking at Greater Vancouver or the Fraser Valley, in Greater Vancouver, sales prices benchmark down about 3 to 5%. On the Fraser Valley side, a little bit more sluggish, 5 to 7%. Again, year over year benchmark prices. So, rates coming down. You have prices coming down, which again is not synonymous with our market. Typically, rates come down, prices go up. There's almost always been that correlation. And this year, it's just not that. And it kind of leans into what's happening sentiment with buyers out there. If you've been following my channel for a bit, I think I mentioned in last video, maybe the one before, I'm getting a lot more buyers reaching out now, wanting to have consultations, wanting to do something. Typically next year, there's some that want to act today, but typically they're planning for next year. And so they're starting these initial conversations. And as I meet with these clients, it's such a weird thing because they can tell. I know for many of them, we're having our consultations and they can tell, like on paper, this truly is a really good time to buy for certain people. Basically, people that have the financial means, they're looking at it. And like I mentioned, they're saying, okay, like interest rates are down, things are, I'm able to get a bit more of a mortgage right now. I'm noticing prices coming down because a lot of these buyers they initially had plans to get into the market this year, but they had to take a step back with all of the trade talk. But they've been monitoring the prices of certain properties and they're coming to me and they're saying, yeah, I was watching this one condo. I saw it was listed at, 869 and now they're at 789. They're still trying to sell. And so they're kind of seeing this happen. They're seeing that they can get approved for, more mortgage. They're seeing that the prices are coming down. So on paper, they feel really strongly. But when it comes to consumer confidence and how they're actually feeling, they're not feeling good. They're not feeling as strong. They're not feeling as confident. So it's like many buyers are having this internal battle with themselves, knowing that it's a good time to buy if you look at the metrics, if you're just looking at the data, but they're not feeling that strength. And I think that's a microcosm of basically what has happened in the real estate market all year. And this is why, as realtors, feet on the street, even in periods where it was quite slow this year, we were still having like lots of open house guests. We were having showing requests. People were coming. It's just at that offer stage, whether the offer came or it didn't. And if the offer came and you came to an agreement, perhaps subjects didn't remove all of these things. It didn't take much to kind of shake a buyer. And so, I think as we move forward, a big, hate to keep ramming home on it, but a big thing that's going to affect our market is our relationship with the US and the trade war. And can we come to some agreement? Can we get the tariffs and all of that stuff out of the headlines? Can we move forward and know what the path is? Because for a lot of people, even in strong positions at their companies, they were very concerned. Am I going to be able to hold on to my job? Like this was a big concern for a lot of people, kept a lot of buyers on the fence. Federally, Canada just released their budget, and so obviously, I'm looking for what are the incentives in there for home buyers, home sellers on the housing front. Really, the two big things are two things that have already been announced and talked about. The Build Canada Homes, which is $13 billion towards low-cost housing, prefabricated housing, leaseholds, rentals. So, again, already announced. And then the second big piece, I say big piece, is the GST rebate for first-time buyers, up to $1 million for a full rebate. Now, here's the thing with that incentive. It was first announced a year ago. The conservatives, the federal conservatives actually put it on the table. And if I recall correctly, their proposal, if they were to win office, was up to 1.5, and it didn't have to be a first-time buyer. It's anyone purchasing new construction. And then the federal Liberals, they announced it early in 2025. They re-announced it later on. It still hasn't passed royal assent. Now it's announced again at this budget stage. So whatever it is, they really need to get a move on and actually implement this, because this is for half the year. Buyers have been, going into pre-sale centers and not really understanding how this GST rebate works. Do they have to pay it up front? Do they have to, apply for a rebate later on? Do they get the credit right off the price? If you scroll back some of my videos, I did do a video on this, so there is information. I won't jump into it here, but there's so much gray area, and this is something that's been on the table for a year and still not fully implemented. So we need to act more swiftly. I think a greater help to the market is to have that GST rebate for all buyers. Why only first-time buyers? I get a lot of people DMing me as well saying, we bought in pre-sale, we haven't completed yet. We could really benefit from saving the GST on this purchase, and that rebate is not applicable to them. And I'm still seeing scenarios where appraisals are coming back, they're coming back short, and many times they're coming back short the amount of the GST, right? And so it would be a really big lifeline to these existing purchasers to be able to benefit from that GST rebate. But, in essence, how the government has positioned it, not verbally, but behind the scenes, it's more of their form of a small developer bailout for all of these empty condos that are brand new that are sitting there, giving them the opportunity to waive that GST, have home buyers save, and hopefully get them to push through some of the supply that they have. So overall, when we're talking about current market, it's that conflict within a buyer. I'm seeing it. It's everything is telling me on paper this is something I should do. There's still that bit of hesitancy. I am seeing it change. I think I mentioned last video, there weren't even many buyers reaching out earlier this year. That has shifted entirely. There are a lot more people saying, look, let's come up with a plan. I'm not ready to do anything today, but next year, maybe in Q1 or by the middle of next year, I wanna make something happen, and there's a lot more of that happening. So I think generally people are getting a little bit more confidence. They have seen rates come down. If we again come to some sort of agreement, just some consistency and stability with the Canada-US relationship, I do think that's going to get more buyers ready to act next year. So that's what I have for you for this week. I hope you enjoyed the video. Again, if you want to chat real estate, you can book me for a call or just give me a call, send me a text, whatever is easiest for you. But I want to thank you so much for watching this week's video, and I look forward to seeing you next week.